Hello, Thrive Mortgage Community. This is Tyler Trumpeter, managing partner over at Thrive Mortgage Co. Coming at you today with a Bank of Canada interest rate announcement for June 7th. So on June 7th, they've actually come out and decided to raise their key interest rate by 0.25%, which definitely came as a bit of a surprise. Only about 1 in 5 economists had called for or predicted there would be a rate hike, so it is catching a few people offside. Clearly, the inflation data that came out in the last couple weeks had been hotter than the Bank of Canada was expecting, and so they're trying to get ahead of the hotter inflation data that did come out by raising today. What does this mean for mortgage rates? Well, if you're in a variable mortgage rate, it means your rate's going to go up. If you're in a fixed payment variable, you may or may not see a change in your payments. We would definitely suggest to contact your bank or contact us and see how much a payment increase may be necessary to either keep you under your trigger rate or to keep you paying your mortgage down at a rate that you would like. If you're in an adjustable rate variable, you will see your rate increase and you will see your payment increase. You're probably not going to see this for perhaps another month. Usually it's going to be filtered through your next mortgage payment, but for sure you can contact us or contact your bank to get firm details about when those payment changes will happen. Of course, if you're in a fixed rate, there's no change to you. Nothing's happened with your mortgage. Everything is going to stay the same. What does this mean for the market? Remains to be seen. Obviously there's going to be some sentiment change for new buyers, maybe a lot more question marks of where rates go in the future. But remember, these rate hikes are really only affecting variable rate mortgages. So if you're a new buyer today, I would say the vast majority of buyers we're helping, like well over 90%, are going with a fixed mortgage rate. For those buyers, their approval amounts haven't changed. Their payments amounts haven't changed. In terms of the amount of buyers this is going to affect, there's very few that are actually taking a variable rate pre-approval or a variable rate mortgage. So fundamentally, it won't change a lot in terms of how much you're qualifying for. But no doubt, this is going to put a bit of a damper, at least we think anyways, on buyer sentiment. So where do we go from here? Bank of Canada rate announcement is July 12th, and we'll be for sure watching that, getting you guys that update depending on which direction we go. They're always going to be rear view looking at how the inflation data comes out. So depending on when those reports come out next and what that information looks like might give us a better indication of where we go for here. No doubt not the best news, but we're going to be all over it. We'll be on top of it, and we'll be sure to get you that update as soon as it comes. In other news, check out our latest podcast. We just did one on fixed rates and variable rates in 2023. That would be very topical for today's announcement, especially if you're in a variable rate. Talk about what you might want to do or consider if you're in a variable rate today in the spring of 2023. And of course, feel free to reach out to us with any questions, comments, or concerns you may have.